Bhave sir had requested me to take two case studies. As I said, though I am new to this profession, I have been associated to a couple of very senior valuers, and I have been their assistant in conducting a few valuations. Bhave sir may be aware of CMA Avinash Joshi and Kedar Joshi, who I would say are my gurus as far as my practical experience in the field of valuation is concerned.
That's
So two different case studies I was trying to prepare. One was on the valuation of software products, and the second was on the valuation of a manufacturing company. As I progressed on compiling this presentation, just for the benefit of all the audience, I will be sharing this presentation to whoever is interested. After this session is over, I will be handing it over to Bhave sir, and he is free to circulate it amongst all the audience. So I thought that rather than making two different presentations and two different case studies, I have tried to club both of them together, and let us see how I progress on this. So I have already been introduced, and so I will not spend too much time on this. Uh, as I said, the two valuations that we are going to discuss today is one of a manufacturing company which is into auto components. So this is basically a more than 30-year-old company. It is a group company of a very large conglomerate in India. So it's an unlisted company, and majority of its operations are in India. Of course, they do export their products to the customers out of India, but the manufacturing setup is entirely in India. As compared to this company, I have deliberately changed the names of the companies because data is more or less actual data to the extent it was possible for me to share. The other company is a very futuristic software product based on artificial intelligence, cognitive computing, and machine learning. It's a relatively new company, just 6 years old, and the entrepreneurs are all the first generation technocrats who have built these various software products. Once again, it's an unlisted company, but they have operations in India, USA, Singapore, as well as Dubai. In fact, they have a R&D center in the US and Singapore. The customer base of both these companies is also pretty diverse. The automobile company is obviously into their customers are all the various automobile manufacturers in India and abroad, uh, including companies like Ford, General Motors, Tata Motors, Ashok Leyland, BMW, Benz, and so on and so forth. XYZ, on the other hand, has a diversified portfolio of their customers. Though majority of their customers are in the BFSI sector or high-tech IT companies, BPM companies, automobile sector, retail, telecom, etc. Some of the companies have been listed out over here, which are their clients. After comparing the overall products and the customer base, we thought of looking at the asset base as well. So as far as the automobile components manufacturer is concerned, they have a very large content of asset base. All these figures are in rupees in crores. So about 450 crores is the gross block of the automobile company. And as compared to that, the IT products company has a very small asset base of about 8 crores in the tangible assets and about 18 crores which are intangible assets which have been capitalized at cost in their books. So total asset base of about 28 crores as compared to 455 crores for the automobile component company. So, which is the valuation approach to be used for the valuation? So, as you are all aware, there are three different valuation approaches that can be used for any valuation. So, what we tried is we have a checklist based on the valuation standards. So, the market approach, which is the identical asset or the comparable asset. So, as far as ABC, that is the automobile company, is concerned, the all the three parameters are fulfilled for the market approach. Like majority of their assets are available in the market, and the similar assets are actively purchased by competitors also. That database is also available. For the IT company, also very frankly, this database is available, but that is since the IT company, the tangible assets are barely 8 crores. This data is available only for the plant and equipment, which consists primarily of the servers and the computers. For the income approach, all the assets of both the companies are income producing, having income producing ability, and both the companies have reasonable projections of the amount and the future income that their assets are able to generate. Going for the cost approach, in case of the automobile company, there is a substantial replacement or reproduction cost available for majority of its assets, which is not so for the IT company. So considering all these factors, in case of the automobile company, we decided that we will have a mixed approach, wherein income approach as well as the mix of market and cost approach should be used. So we approached third-party valuers who we enrolled as consultants for valuing the plant and machinery and the land and building. And the fair market value was certified by the land and building and the plant and machinery valuers. Their reports were used as the basis for our calculations. So as compared to a gross block of about 455 crores, the fair market value of about 305 crores was certified by the valuers. And we have taken cognizance of this value in our report. Having done the overall asset analysis, we went about the historical financial performance of both the companies. And the figures are obviously not comparable. Whereas the automobile component company is having consistent turnover of in the range of about 600 to 700 crores. The technical IT company has crossed 50 crores in the year 1920, and obviously the raw material cost and the direct expenses are not there for the IT company, which is the major constituent as far as the automobile company is concerned. Though the IT company is also a profit-making company, so just to get a feel of the percentages of the overall cost as compared to the operating income, we compiled this information whereby about 60 to 63% is the cost of raw material. Whereas in case of IT company, the labor cost has now stabilized to labor in the sense the various software developers and those kind of staff, white collar staff, are slightly less than 50% in the year 1920. The profit also 25% profit was achieved by the Technosoft Limited as compared to a loss by the auto components company in the year 1920. Of course, the loss was primarily because of the slowdown in the automobile sector because of the introduction of BS6. So both these valuations are dated 31st of March. And also the debt equity ratio is in excess of 50% for the automobile manufacturer, and it's as good as 0% for the IT company. Uh, we went about having a detailed discussion with these companies for the projections that they set out to submit for the valuation purposes. And in case of ABC, we focused on the overall client history, uh, client-wise projections, new client acquisition plans, new product development plans, and based on the past history plus all these plans, we agreed to a projected sale, which became the basis for their future projections. In case of XYZ Technosoft, uh, the existing products potential, they have about 4 to 5 products which they have developed over the last 6 years. And there is a detailed market share analysis which has been done by this company. And their existing clients, their possible future clients, they have come up with a detailed plan for new client acquisitions as well as new products in the pipeline, so as to increase their share in the overall market. And for the market share, various reports of established researchers in the market like Gardner or Grandview, Fortune Business Insights, Forrester, etc., have been used to estimate the market size of their products. So based on this, I hope he's okay. Yeah. So the sales projections of ABC were submitted by the company, and they have in fact a drop in the year 1920, and they have also projected a drop in the year 2021 thanks to the COVID situation. But they are quite upbeat about the future, wherein consistently in excess of 20% increase has been projected year on year. In case of XYZ, the market size which has been predicted by the various researchers uh, is in the range of about 1 lakh crore for the year 2021 to 284 crores, 2 lakh 84,000 crores in 24-25. And the sales projections are in the range of about 0.08% of the market share, slowly increasing to about 0.27% of the market share, based on their feedbacks that they are having from their existing clients and the dialogues that they are already having with their potential new clients. So they look at increasing their overall customer base from about 100 today to about 400 over a period of 5 years. And the projected sale is also about 768 in the year 2024-25. For the WACC calculations, the base WACC calculation as far as the risk-free rate of return or the equity premium is very similar for both the companies, because both are Indian companies, and so the database has been used for the risk of Indian bonds as well as the risk premium of the Indian stock markets. So the expected market return is about 13.44%. But because of the beta of the peer group and also the debt equity ratio of the peer group, the cost of equity in case of the automobile company is about 13.80% as compared to 17.50% for the IT company. And because of the debt estimated to be in the range of 40% over the next 4-5 years, the WACC has been calculated at 10.90% versus 17.50% for these two companies. the DCF calculations also, because of the different trends, the overall enterprise value of the automobile company is working out to 535 crores. Uh, of course, we have assumed about 2% long-term cash flow growth, as against about 10% cash flow growth in case of the IT company. And the discount factors of 10.90% versus 17.50% gives a valuation of 826 crores for the IT company. So you can see that even though fundamentally, if you look at the past history, the progress so far, the turnover so far, profitability, the automobile company seems to be much better company on paper, but the potential of the IT company and also their product expertise has helped them getting better valuations. Of course, comparison of 535 with 826 is not the end of it, because as I mentioned in the earlier slides, in case of the ABC Automotive, we have also taken into consideration the fair market value, and we have given a 40% weightage the fair market value, and 60% to the discounted cash flow method, because of which the enterprise value is about 443 crores versus 826 crores. And on top of that, there is also a debt of 272 crores for the automobile company. So the net value of equity is 171 crores as compared to 826 crores. Even though the valuation of XYZ Technosoft appears to be very high, we also did a valuation synthesis whereby we compared the overall values with the peers who are listed on the various stock exchanges, and we thought that overall the valuation has come up quite reasonably okay, because the nearest competition, all the three companies are having negative EBITDA and still trading at huge market capitalizations of up to 1,000 crores or 8,000 crores in case of Tata Systems. So I thought of comparing the two diverse companies having diverse products and coming up with two different values, how the various assumptions, how the way forward, how the asset-light companies can in fact get tremendous valuations as compared to traditional companies like the automobile. So that's it about my presentation. If there are any questions, I am happy to take.
Apte sir, you are genius, which everybody says anyway, but you have once again proved that. So, to be honest, I am not surprised. But after listening your great presentation, I am not surprised at all. And this I am not saying for the sake of it. And no wonder you achieved the position of president, because you had been one of the most respected presidents of CMA. And I think you are an all-rounder also. So, I mean, the dimensions which you have made clear of the valuation. And to be honest, one more thing is that most of the consultants are very secretive about any figures or any this thing, and they just make it, roundabout discussion. But you had been frank enough. You ensure that the boundary of disclosure is maintained. At the same time, you guided the audience of almost 100 plus in knowing how to do the valuations, how to apply the factors, and a combination of auto company with software company. I think it's a great learning.